Welcome back. You're watching Money, 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 and we are getting Morningstar's best and brightest ideas for 2019 mutual funds that perhaps you can consider for your portfolio. Kaustubh, so now let's quickly get down to the multi-cap category, which is being very widely sort of advocated these days because there's more flexibility.
That's right.
A fund manager can move across market capitalizations and decide what's best. So important to have good multi-cap funds. Which ones should we look at?
Absolutely. I think you've hit the nail on the head. They have more flexibility, and that's why we've touched upon three funds that we really like. To start with the Franklin India Equity, I think one fund that we've really liked for a long time, Anand Radhakrishnan, who's the CIO Equities, runs the strategy. Again, a very, very astute manager, backed by an excellent team of professionals. So that's the first comfort that we derive from the strategy. If you look at the strategy per se, he runs about a 70-30, so 70 large, 30 mid is typically the mandate he would run with. He's largely a growth manager, but he'd also take some contrarian bets, in his portfolio. So unfortunately, 2018 is probably a little bit of a hard time, and some of his contra bets haven't worked for him. But we would expect, because he's a very, very patient manager. We've seen in the past where some of his contra bets haven't worked. He's stuck on to his convictions, or cut losses when the thesis hasn't worked. But his patience really paid off over the long term. So we think this is another strategy which is like an evergreen strategy, should definitely form a part of investor portfolios. Okay,
yeah. So returns down obviously 5% this year, 9% over 3 years, and about 16-17% over a 5-year period. That's this one. You also like the Mirae Asset India Equity Fund as well as the Codex Standard Multi-Cap.
Right.
Do they have similar investment philosophies, or are they very different type of funds?
So Mirae is actually a more diversified strategy. So Nilesh, another great manager, and if you look at the way he runs the portfolio, he's not really looking to move beyond the benchmark. So in terms of the sector weights, it's really stock selection where his forte comes in. And he's got a very, very keen eye on valuations. So when I say keen eye on valuations, he's looking at good quality businesses. At the same time, he doesn't want to overpay for them. So he focuses on the margin of safety concept, so that when he gets into a stock, he needs to be convinced that he's got enough of a cushion that if things go downwards, he should be reasonably protected. And that's really paid off for the kind of strategy he's been running. He also runs a more diversified strategy as compared to Anand's strategy. So kind of reduces the risk, and you would see a much more consistent performance across calendar years for a strategy.
And what's the market cap mix? Because in the first one you mentioned it's 70%, almost 70% large cap.
So it's similar for Nilesh too.
Okay, and finally the Codex Standard Multi-Cap?
Yeah, so Codex again, which is run by Harsha, he's got an eye on both. So I mean, he does overweight, underweight sectors a bit in terms of both on his growth expectations, and also looks at valuations from historical perspective versus also a relative perspective to the other sectors. So he does bring in that element. So he's also runs a little more aggressive strategy in that sense. But again, I would say largely growth oriented, and I think this is a strategy which has delivered some significantly consistent returns over the years. In fact, it's been a favorite of investors for the last many years. Probably become the largest fund in the industry right now. So.
Absolutely. So that's the fund from the Codex stable. That's multi-cap funds for you. Now let's come down to the interesting bit, mid-caps and small caps. And lots of people want to take the risk, want to believe that this is going to be again a dream year for mid-caps and small caps. Starting with mid-caps, the funds that you'll go for.
Okay. So firstly, I would advise that you need to bite that bullet a little bit, that be ready for volatility in mid and small caps, and have a very, very stable 7 to 10 year investment horizon. That is the first thing I would advise investors. When I look at some of the funds, and we've picked two slightly different funds. So one is from the Franklin stable again, the Prima fund, with Janki Raman, who's their mid and small cap specialist who runs this fund. So if you look at the strategy, one is, given that mid and small, there's not so much research, you need to really focus internal efforts into carrying out the best ideas on these counters. So Franklin's built an excellent team of analysts, with wide experience, who can go and identify these ideas, from the small and mid-cap space. The other thing which Janki does is knowing the fact that, you need to get your stock picks right. He focuses a lot on corporate governance standards and the quality of the balance sheet and the quality of the management, really, because you don't want to be stuck with a stock where, promoters run away or things like that. So I think there's an immense amount of focus. So he's ready to trade off, a little bit of gains if he doesn't believe in the quality of the management. So I think there's a lot of focus at Franklin. Not that others don't do it, but I think there's probably an extra focus that Franklin brings in on that. So the other thing he also does is builds a fairly diversified portfolio just to reduce risk. So all of these factors, give us a lot of comfort in terms of the manager and the process that he's running. That this will be a very, very good strategy even going forward.
Yeah, I mean, you have to be prudent when it comes to this, this part of the
Absolutely.
investing universe, I suppose. The DSP mid-cap is what you like, and that also brings me to one of the best-known mid-cap and small-cap managers, I mean, Vineet Samre, and he has really been a rank outperformer over the last couple of years. Do you expect that consistency to keep playing out? And that also brings me to the small cap side of things, because you do like Vineet's small cap fund as well.
That's right. So the interesting thing that you brought about is consistency. So in fact, people have been questioning because his small cap fund has seen a bit of a hit in 2018, much more than the peers. But I would say that, worry not. And, like you rightly said, I think Vineet has been, one of those flagship small and mid-cap managers. He's really sunk his teeth over the last, 8-10 years into managing some of these strategies. The mid-cap he's taken over more recently, 2015, but, the micro-cap, which is now known as the small cap, he's been managing for a very long time.
Yeah. And it's open for subscription, again, because the fund was shut for a very long time.
The mid-cap's still open. The small cap is open through SIPs. So I'll talk about both funds together. I'll just, make it easier. Again, Vineet, very, very research-intensive process in terms of, again, identifying those quality companies. You don't want to get that wrong. So clearly, there's a lot of focus on that. He spends a lot of time himself meeting the management, because that's actually doing channel checks and things like that. You need to do that additional level of due diligence that's required. So I think they spend a lot of time in identifying the right set of ideas. Pretty patient managers. So, it's a buy and hold strategy, as it should be in a small and mid-cap side. Also, what he started doing is taking some value contrarian bets as a part of his portfolio, just to add a little bit of a variation in the portfolio, where we'll see some beaten down themes or sectors or stock ideas where he fundamentally still believes are strong, but extraneous factors have pulled them down. Is where he'll probably come in. Might bear the pain for some time, but it should pay off over the long term. So I think two really good strategies, both from the mid and small cap side, and we would definitely look at recommending. The other small cap fund we haven't spoken about is from the HDFC stable. So another great manager, Chirag Setalwad, who's been managing the mid cap strategy since inception. Small cap is a fund that they've reconstituted over the last couple of years. The last 2 years to be specific, it's become a pure small cap fund. But again, just HDFC's bandwidth and ability to identify those ideas. Because when we talk about small cap stocks, we're talking about beyond the 250th market capitalization. So if you're really going down the capitalization curve, you need to have enough conviction. And he looks at companies that have high ROEs, good free cash flows. I mean, these are some of the metrics that he would put into place when he's identifying. Obviously, quality of management, all of that is paramount. And then he would build a fairly diversified portfolio again. And we've seen 2018, where small and mid caps have really fallen off the charts. This fund's actually fallen a lot lesser than the peers. And I think that's where that quality criteria really paid off for him.
So let me ask you this: over at least a 3 to 5 year period, if you're investing in a mid-cap fund and a small-cap fund, what is the realistic return that you should and can perhaps expect, because you're taking on that kind of risk?
So I would probably want to extrapolate that time period. I would probably say 10 years. 10 years. I think a 15%. As we've witnessed, should be doable. Again, caveats that markets are unpredictable, but I think that's a reasonable amount of return to expect for the risk that you'll be taking on. Large caps would probably trend a little lower, but 15, 17% should be something on a CAGR basis, should be doable. The other good part is that we've been adding a lot of new listings on the small and mid cap side, right? So exciting new companies with great growth prospects from Sunrise Industries coming in. Managers can identify them, and you can really ride that growth wave.
Well, as long as they work, some of these IPOs are flattered to receive in the recent past. But anyway, to round up the equity side of funds for 2019, tax saving funds. And it's interesting because here an Axis name finally popped up. You like the Axis long-term equity. Interestingly, Axis, I think, has been like the mutual fund house of 2018, because a lot of their funds, the large cap, the mid cap, they did exceedingly well last year.
Yes, that's right. Absolutely. So I think they bore the pain of their stock picks in 2017. But, that patience paid off for them in 2018, and all credit to Jinesh and his team. So Jinesh, who's the CIO equities, who manages this strategy, if you look at this, he's running at a more concentrated approach. His high conviction ideas, and at the same time, he's an out and out growth manager. He does not really worry about valuations as long as growth, pays off for those valuations. So that's really the portfolio that he would like to build, and that's really that segment of the market that has done well in 2018, which didn't do so well in 2017, like I mentioned, but over a market cycle, this is a fund that we really like. And we think of this as not just as a tax-saving instrument, but you can just get into it as a multi-cap strategy too. I mean, that's one way of looking at it. While you have a 3-year lock-in, it kind of enforces some discipline any which ways.
Okay, so that's one fund. And the other that you like, I think that's such an old fund, the Franklin India Tax Shield. I think everybody at some point in time or the other in their lives have had some money in this fund.
That's right.
But at least returns, I mean, last 1 year to 3 years have been kind of underperforming other funds.
Yeah, so there has been a little bit of and one element has obviously been because there's a slightly larger large cap exposure in this fund, and some of their contra bets haven't worked, for the fund house as a whole, like I mentioned. So this fund it's a recent manager who's taken over the last couple of years, Lakshmikant Reddy. Anand used to manage this fund earlier, but really the core of the fund remains the same. So he's more of a GARP, so he does look at valuations. Like I said, Jinesh doesn't really care too much about valuations. There's a more clearer focus on valuations here. So, growth at a reasonable price is his style. A more diversified portfolio, but he doesn't really care about the benchmark again here. So it's that typical Franklin style in terms of, the benchmark agnostic structure. But, I think over a market cycle, they should come back up the curve.
Okay, that's a lot of equity funds, and for the benefit of our viewers, let me quickly round this up. So large cap funds, the Morningstar View for 2019, the HDFC Top 100, the Aditya Birla Sun Life Frontline Equity, the ICICI Prudential Blue Chip Fund. Coming to the multi-cap category, there's Franklin India Equity, Mirae Asset India Equity, and the Kotak Standard Multi-Cap. Let's come down to the higher risk areas, mid-cap funds. Here there are two choices that Kaustubh has picked out, the Franklin Prima Fund and the DSP Mid-Cap. Down to small caps then, again, DSP, the small cap fund this time around is Kaustubh's pick, along with the HDFC small cap. And the tax savers, if you're looking at ELSS funds for 2019, then the Axis long-term equity and the Franklin India Tax Shield Fund. So that's a lot of funds. I think it completely covers the equity part of the portfolio. There's also fixed income. If you're looking to put some money away from fixed deposits and start investing in the fixed income world of mutual funds, we'll come back with the ideas on the other side of the break.